All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today we're going to talk about some interesting times in the market. We're recording this March 6th, 2021, and it's been an interesting week. Wouldn't you say that, Dylan?
I've lost a lot. Yeah.
Yeah, there's been an interesting market rotation kind of going on, and it's funny, the underlying thesis on the economy and the companies that are being bought and sold really hasn't changed a ton, but their price on the market is moved quite a bit. Uh,
I I mean I think that we can agree this would be considered a correction, right?
yeah, I would say certainly for the tech stocks, I think it's 5 to 10% range is typical for a correction.
Yeah, we're at about
Um,
10.
yeah,
Um,
yeah.
I still think the market's going to tank within the next like 8 months. I just don't know when.
Yeah, sure. I mean, maybe.
Too much money has been printed.
Yeah, I mean, do you think they're going to turn the printers off? Is that what you're?
That's what Michael Blurry would say.
I know, right? Interesting character to say the least. But yeah, so I want to talk about this story. It's actually let me go back here for a second. So, are you familiar with this book here, The Intelligent Investor?
I am not.
Never heard of it?
Uh-uh.
No. All right. So this would be
Uh-uh.
a whole new story for you then. So The Intelligent Investor is written by a gentleman named Benjamin Graham. Benjamin Graham is Warren Buffett's idol to a degree. Yeah, he's the man who helped shape Warren Buffett and many other value investors into what they've become. He was a professor, taught at Columbia School of Business. I can't remember the years, but it's quite a while. Like that, but that's like his seminal text. And in there, he talks about this personification of the market. He calls him Mr. Market.
How
And
cute.
yeah, exactly. It's an interesting way of keeping track of the movement in prices here. And you may have heard this Warren Buffett quote before. Dylan's definitely heard me say this.
A lot. A
Yeah,
lot.
yeah, exactly. Where this basically comes from, though, is this personification of Mr. Market and how he is almost always incorrect. So this is the kind of like the cycle of the stock market, if you will. This kind of movement back and forth between this optimism and euphoria, all the way down to despondency and depression. When you trade like Dylan does, you experience all these emotions within the same day sometimes.
Yeah, within the same day. Within the same day.
Yeah. It's funny right now because the underlying basically business of Apple. Apple didn't sell any fewer iPhones this week than they did the week before, but the company value is down 10%. So the
At least
whole
it's only 10.
yeah, exactly, the whole Mr.
Fubu's down
Market.
50.
Yeah, exactly. The whole Mr. Market thesis comes basically from that the idea that you have a business partner, if you will, who every day quotes you a price for what they would be willing to pay you for your portion of the business, or what they would be willing to sell you their portion at that price. Or you can just do nothing. And this gentleman, Mr. Market, this business partner, is bipolar. It's yeah, exactly, right. As someone who grew up with a bipolar father, I've seen this one firsthand. It's
Okay,
an
fair
interesting
enough.
cycle of kind of through moods where for no reason whatsoever you want to come home and bought a brand new vehicle and don't even know the price until like can't get off the couch. It's interesting, and this is your business partner whether you would like it or not in the stock market.
Wait,
Dylan.
is that story real?
Yes.
Oh,
Yeah,
jeez.
that's
Okay.
that was 100% my father. Yeah, yeah. But the whole kind of premise here is that you can take advantage of this guy, if you will, Mr. Market. When he's having a good day and everything is great and he quotes you a high price, you know what you do? You sell him part of the company, right? And then he comes in like 2 weeks later and he's like depressed and goes like, you know what, this sucks. Like I don't want anything to do with this. I want to retire. then you know what? You just buy them out at the ridiculously low price.
If only it was that easy.
Yeah, I know, right? Well, the problem is you have to keep your own emotional roller coaster here in check so you don't get sucked into this. There's this constant swinging back and forth between exuberance and panic. I felt it before. It's like you just have to step aside and trust your evaluation of the company itself. Like, you have to stop and think, like, has anything really deteriorated or changed about why I made this investment? Is the underlying thesis for my investment changed? And if the answer is no, then, like, why would you make any moves?
Right.
So, they go from utterly, like, enthusiastic as you watch, your stock just, like, skyrocketing, right? You just exploding everywhere in beautiful colors. And next thing you know, you're like, what did I do? This is actually a picture of Dylan as he opens his portfolio.
That was me this week. It was a rough week for Dylan.
Yeah, we've all had it, though. Honestly, the most important thing is that you stay in the game, because, like, that's how you ultimately win long term. You need to learn to control your emotional state and take advantage of the market when it gives you these opportunities. So, the drunken psycho here is another way of describing the bipolar manic depressive mood swings in the market. All you're doing really is just looking for the company at the underlying price that you think is fair, and they are constantly shooting you new numbers. That's what the tickers are doing, right? So it's up to you to sit there, know the number, and wait for it. Warren Buffett has also kind of said that, like, baseball, investing in stocks can be like baseball, where there's no pitch count as far as the number of balls. You can just sit there and wait all day if you want, and just keep taking them until you find the right one and just swing away. So, this is kind of Ben Graham right here. This is his mentor, and basically, as we were saying there, when the market's irrational, you have to take advantage of these situations. And we're not quite there. If you watch our other video on AMD versus Apple versus Amazon, these large tech stocks still have a fair amount of downside that potential, but that doesn't mean that they're how do I put this? The company itself is still a terrific company, but, like, the price to kind of hit a safety net has got some little bit of room to run still there. But I just wanted to get this message out there, because it can be really disheartening when you have weeks like this. Like, I know it's I listen to Dylan about it, like, almost every day, and it's tough.
Down $5,000 again. Yeah, no, another $5,000.
Yeah, I know you. It's tough, because you grind away for weeks and months, then, like, putting that money in there basically, and then, like, you just watch it, like, evaporate. But the important thing to always kind of fall back on is, like, you have to stop and think, like, did my underlying opinion of this company change? That's why I prefer to be a value investor. It helps me sleep better at night than Dylan does.
Yeah, I don't sleep. Yeah. Yeah, no, yep.
Mine aren't much better, but
I'm exhausted. I'm doing stuff constantly.
No, but so stay the course. Find companies you like and believe in their long-term value. Don't let Mr. Market and his little mood swing sessions really kind of influence your opinion. All right.
And there's one more thing that you said to me that I learned this time, is if you were margined, it changes how you would dictate something. For instance, I try not to swing trade stocks sometimes I let the stock go through my stop loss, and that's just if I believe in it long term, I know it'll eventually go up, or it should, or hopefully it does. If it's like a scary play, I always have a stop loss. If you're margined, it can ruin everything.
Yeah.
Because then it gets low enough. So I'm not margined right now because there's a correction. So
yeah.
Now I'm just sitting. I'm just watching my account. Very sadly.
You'll be back up in no time, I'm sure. That margin is definitely dancing with the devil, but we should probably do a separate video on margin at some point in time. I think it's a good idea.
Yeah. My graph's great for that. Okay.
Yeah, exactly. All right, well, thank you guys for tuning in. Hopefully, we'll see you guys on another video. Please, leave us a like if you like the video. Give us a comment if there's anything you'd like to see us talk about or change. All right, thank you again.
Have a good one.